So today in this video, we are going to talk about swing trades, right? So I got into this APA, right? Swing trade about the 24th, right? And I got 3-week out contracts, but I'm going to explain that later. So the first thing you're going to notice is we have time frame continuity down to the downside. You can see down here at the bottom of the screen, right? So they've been selling the year, the quarter, the month, the week, right? And also the day and so on. So that was time frame continuity. That was one thing off my checklist that gave me a higher probability for this swing, right? And then what I'll do is I'm going to turn on all of these lines, right? So what I also seen was a rejection of these Broadening formations. And I seen this 2-1-2 setup, right? So it was an inside candle, which I normally don't recommend entering on. But the reason I did was off the daily, right? We're going to take you down to the daily time frame. So what happened was down here on the 23rd, right? I seen this rejection of this Broadening formation on the daily. So what I did was I got like 3-week out contracts or 2-week out contracts, but I was looking for this to play out in maybe a day or two. Now, as you can see, it took a little longer, but that's the most important thing about buying time, right? So what I did was I entered a small position here, right? Off the break of here. And a rejection of this Broadening. Basically, it was a rejection of this Broadening formation here also, right? Seen this run up, rejected, pushed down. Time frame continuity was still red. And I'm like, okay, this might have some selling off soon. So the rejection of this Broadening formation is kind of sort of hammer, not really, but it was enough for me to have some high conviction in it, right? So I entered the next day. We broke down a little bit, popped back up. As you can see, this was my entry here, right? At 36.47. Boom. And as you can see, each day we just kept rejecting this Broadening formation. And we went up here. So what I did when we went 3 and I seen we rejected, I actually added to my position, right? And I added into my position on the 30th, right? Now, mind you, I still had about 2 weeks left on these contracts. So that was the one that gave me a more high probability. And I'm going to take you back to the weekly really quick, right? So then we had the 27th. And we actually started to break this level, right? And so that inside candle, we opened up that Monday, December 4th, and boom, we got this big flush down, right? So that was like all my convictions off my checklist, right? So on a daily, so then we did a 3-1, right? Next day, added to my position. I say we're rejecting, we can't break over, right? Kept waking over, kept rejecting on a 1, and then we went 3-1-2. And you know about those 3-1-2s, right? So I was in my full position by now. And boom, look at this flush down. We finally got it, right? That was just patience, right? I didn't care what it was doing. My stop loss basically was at the top of this wick, basically. If we really close like up there and we didn't, like this is actually my stop here, right? Let me get this line right here. So you can see, let me see if I even got a stop. Well, I'll use any one of these. Just do this. Let me make this white line. Let me just put stop. There we go. This is going to be my stop. If we closed above it, if we did, right, we just kept rejecting. Broadening formation, boom, boom, boom. That's why broadening formations are so important. When Rob said, you asked Rob what broadening formations are important, all of them, right? Because as you can see, we're rejecting 15-minute broadening formation, rejecting weeklies, we're rejecting dailies. So, boom. So I'm in this trade, it's popping up, it's going up and down, but I got time, so I'm not stressing. That's the main thing about a swing trade. You have to buy time on your contracts. Even if you're day trading, sometimes it's good to buy time on your contracts until you really get comfortable with trading 0 days and 1 day outs and different things like that. So, I'm in this trade. I know I got time. 3 days passed. We still teetering, low above my entry, coming down, right? Closing below it. Get this 3 popped up. Basically goes up here, takes out liquidity, comes back down, right? Next day, we just trade inside, but we still below my entry, right? Or maybe I'm up like 1 or 2%. Actually hit a PT with just one candle, but I still had conviction. The next day we open up 312, continue to push down, basically hit another PT, right? And I'm trimming my position, some of my position. I trimmed some of my position here, and I said trim some of my position here. Next day we open up, obviously 2 down. So we continued, right? And as you can see, we came down, basically tested this previous week's low, right? Which was also an area. And as you can see, we rejected there. And then when we opened up the next day, gap down, and look, right here, bounced right here on this weekly broadening formation. Next day, 2 down and broke. And we got all the way down to 33.58 today, right? And we got the possibility to keep pushing down with this time frame continuity still red, and maybe hitting this broadening formation here, right? And taking out 33.02. So using those higher time frames, the time frame continuity and actionable signals, I was able to find this swing trade. So you had the possibility of taking this 312 and a break here, right? So really, I got into this trade kind of early, but I brought time. But I could have waited to and seen this 312. You know, that could have became my entry on this inside candle and, you know, wrote it on down. But then if you come to this weekly, right, because I could have waited till like Monday and seen how I could have waited, you know, for this inside candle the next week to break. And I could have entered here either for a, you know, a swing, you know, for the week. But I gave myself plenty of time. And that was a 212. So that's another actionable signal, right? And then if we come down to here, right? So, but also, monthly, like I said, we just been slowly selling off for the last couple of months once we rejected this broadening formation. Now, this is a monthly broadening formation here, right? Rejected here, pushed back up, rejected this weekly, and continued on down. So price always wants to go where the most twos are. And as you can see, it's 2 down. So that was my reason, but I entered this trade off a daily, and I was looking for it to play out within a day or two, but I entered with time on the contracts. So that's mostly what I was looking for in this trade. 2 higher time frames had actionable signals. The daily time frames I was actually looking for, like I said, the day or two, that was an actionable signal. I had my stop in place. I knew where I was going to exit if we basically broke and closed over 37.07. Had plenty of time on the contracts. Knew I was willing to lose 50% on the contracts. Almost got to 50% with that 3 candle, and we broke completely back down. So that's how you use higher time frames to kind of see how to swing trade, like, you know, like just weekly, right? It would have been in this weekly. This would have been your entry, right? Monday the 27th, once again, actionable signal. Let me know on the next week. And that's why I added into my position. Next week open, boom. And we flushed on down. So like you'll see something like this, like let's just say, you know, you coming up on the end of the month, you see an inside candle, but market level, you know, set your alert. And then if it break in time frame continuity and different things like that, or aligning, once it breaks, you enter the trade and take profit at your profit target. So swing trading is no different than day trading. You're just using higher time frames, rather it's the weekly or the monthly or whatever. And basically you can use the daily. For swing trades, I like to use the daily, the weekly, and the monthly, right? And so on. But we're just looking for those actionable signals, like on this daily here, or that 312, that could have been an entry. Well, that would have been PT1. Could have took some off and see where it went. And as you can see, this trade basically played out in 1, 2, 3, 4, 5, 6, 7, 8, 9. It took 9 days to play out for 260%. So, like, don't be discouraged to take swing trades. The main thing is if you got time frame continuity on your side and you have actionable signals on the higher time frames that you're looking for to enter off of, and basically just give yourself time. And, you know, if you're going to take it off of monthly, you want to give yourself, you know, about a month on contract. You're taking a weekly, you want to give yourself about a week or two. You know what I mean? So swing trading is no different than day trading. You're just looking at these higher time frames to be going in the same direction and the same participants, right? Mark your broadening formations so you can see them, so you can know where things going to bounce. And as you can see on this day, we couldn't break through it. Next day, we broke through it because sellers got aggressive, volume came in, and boom. And we'll see what we get tomorrow. Obviously, you could have just kept moving your stop down, right? So let's just say you're still in this trade. Now you can move your stop here and say that'll be your exit at 34.46, and see what the next day brings. But the contracts actually expire tomorrow, so it could get pretty aggressive, being that it'll be a 0 day by then on that weekly. So, this last contract can end up being, if we get down here, 400, 500%. So that's the good thing about swing trades. I at least like to make 50% on the swing trade. It was not really worth me entering. So I'm also looking at ATR and risk to reward. So that's one of the main things I look for. There's just a quick video on swings. That don't be afraid to swing. Just have your exit. Could it gap up? Yeah, swings are risky. You know what I mean? You just got to be willing to lose 50%. But the thing I like about swing trades is you can be willing to lose 50% without taking a major big position, right? So you can take a swing trade and maybe use $100, right? But if you get 200-300%, you made a couple $100 rather than entering a day trade with 500 or 1,000 and making 50 or 100% real quick. You actually can let this ride out, take some profit along the way, or since it's only 100, let it ride, but make the same amount of money without the stress. So you just got to be willing to lose 50%. If you put 100 in, you're willing to lose $50, $25, $50, whatever. Cool, right? You can take a smaller position and looking for a higher profitability return with a swing trade. So that's all I really got on swing trading. Just don't be afraid to enter. You know what I mean? Keep your stops wide and take profit along the way and move your stops down along the way, whether it's mental or physical, and let it ride out stress free. So that's all I really got for swing trading. It's no different than day trading. You're looking for actionable signals to break. They break you buy yourself some time and you let them ride out. Trading can be so simple. Don't overcomplicate this.